All right, so that was my screen recorded trade. And now I'm going to go into breaking down the logic behind why I took that trade. And we're going to start on the daily time frame. So this daily volume imbalance, I extended forward in time. At the end of Wednesday's trading session, we failed to close above it. So I wanted to see how we reacted with this daily volume imbalance leading into the Asian macro. I wanted to see if what we were going to do. So if you look at the close of this candle, right, from Wednesday, 30.099. If we go over here, the low of this candle, that's the top of the volume imbalance, is 3,100. So we failed to close on Wednesday above this daily volume imbalance. The same way that I would look at an inversion fair value gap, in order for a gap to be inverted, you need a close above it. Like let's say I have this SIBI right here, okay? I need a close above, right? Let's just, for example, I need this. This would be considered an inversion because we got to close above the SIBI, okay? But that was not the case for this volume imbalance. So that's on the daily. That's what I'm seeing on the daily. Also, we took out at 6 p.m. when we opened, we took out the Wednesday's high. Okay, so that's what I'm seeing on the daily time frame. Let's drop down to the 4 hour. On the 4 hour, we traded into this 4 hour SIBI and we got rejected. And at 6 p.m., we traded into this 4 hour SIBI one more time and got rejected. Okay, so right now I'm leaning more towards bearish on the daily and on the 4 hour. Let's drop down to the 1 hour chart. And this is what I do before I take a trade, I'm analyzing all these time frames and I'm trying to make sense of what price is telling me on the higher time frame so I can understand and have a better idea of where price is going directionally, okay? And again, I get it wrong sometimes, but this is just the best way that that I know as of right now to kind of read price, okay? So here on the 1 hour, this is Tuesday's high that we had taken, okay? And these are relative equal highs on the hourly chart. So what's above relative equal highs? Buy side, okay? Buy stops. So at 4 p.m., we took out Tuesday's high. We also reached into this 4 hour SIBI. So we took out relative equal highs and we reached into a higher time frame inefficiency in the form of a SIBI, and we failed on the daily chart to close above this daily volume imbalance. So everything is telling me bearish, okay? So now let's drop down to, let's drop down to where we took this trade. Let's first go back a little bit to 6 p.m. So disregard this right side for a second. Let's just look at this left side here. This is the high from Wednesday. Okay. We took out this afternoon session high, as well as, remember, we also took Tuesday's high as well. We have this massive fair value gap that forms. So if I was a new trader and I saw this, and if I was a breakout trader, I would want to go long here, right? I would at least go long on the next down close candle maybe, right? And where would I put my stops? I would put my stop down here, or maybe I would put my stop down here, or maybe I would put my protective stop down here, okay? So this gets longs trapped. Also, where are we trading out of? The new week opening gap high. So that's a key level, okay? And remember, I'm bearish on the higher time frames. The daily, the 4 hour, and the 1 hour, I'm leaning bearish, okay? So 6 p.m. happens, we trade back up, we take out anyone that had gone short here, okay? Price takes them out, gets them out of the game, and then we consolidate, all this right here is consolidation. Let's make it like a purple. Okay. So we're refusing to go up here. We've also taken this high. So you have traders trapped on the short side here. They're taken out right here by this energetic move at 6 p.m. Right? Then you have this move down here, and we consolidate, and we're not getting an energetic move. So traders are putting their stops above all these highs here. So all this is buy side liquidity. Okay, all these little highs right here, buy side liquidity. What does price do? Price trades up, takes all of this buy side out, all of these buy stops. All the traders that are going short here because they see that this high has been taken, so they're like, oh, we took this high, we're going lower. But not yet. You have to wait for price to meet time. So right now, these traders are looking at price, but they're not waiting for time. What happens? Right prior to the 750 A10 macro, price trades up, takes out all these buy stops. All those people that are going short here, price takes them out. We reject. This BISI, I extend forward in time. We trade below it. It is now considered an inversion fair value gap. I had set a limit order right here at 802. I set a limit order and it didn't get filled. But luckily for me, let's get rid of this for a second. There was a breakaway gap here that formed. A SIBI breakaway gap. So I set my limit order to the bottom of that breakaway gap. We get filled. Price trades back into this inversion fair value gap. I have my stop placed above the inversion fair value gap because it's the larger PD array. Okay, so you have to factor that in. If you need to lower your leverage so you can have a wider stop, then do that if you need to. And I have my stop above the new week opening gap high. So in my mind, this is a protected high. This is going to be protected here because we traded above the new week opening gap and back below it. So traded back into this inversion fair value gap. Look at the bodies, price. We color outside the lines a little bit, but generally it's closing in the lower half of this inversion fair value gap. That's signifying to me bearish sentiment. We then break below the inversion fair value gap, back below this small breakaway gap. And at this point, I know that price is going to break to the downside because the fact that price, if we were going to go higher, price would have here closed in the upper half and above that inversion fair value gap. But because it refused to do so, and we had closes in the lower half, and we eventually broke below it, that to me was price tipping its hand that we were going to go lower. Okay? So we get one last opportunity here to go short. You could have entered here as well, set a limit over there, and we break down. And we take out all the lows here. So when we had this run up here, traders put their protective sell stops here as well. All right, you break down, take out this engineered sell side. I was originally going to take my partial here, but when I saw us trade back into this inversion fair value gap and trade below it, I felt that price was going to get really heavy. And what I mean by heavy is it was going to be heavy to the downside. It was going to move violently and quickly. And that's what we got. Took out these lows. We then we traded to the consequent encroachment of this new week opening gap. I'm just going to get rid of this real quick. So that is the consequent encroachment. I'm just going to eyeball it here. That is 50% of a gap. Okay, so we trade below it. And also, we have a measuring gap that formed. Okay, so measuring gaps form, I believe it's around 50% of where your entry to your terminus is. So if we enter here, and our terminus is down here, that measuring gap forms right around that 50% level. So price trades below consequent encroachment of the new week opening gap, bearish. Okay, the same way that we treated the gap, the inversion fair value gap here, it's the same way we would treat a new week opening gap. Okay, it's the same process. A close below its consequent encroachment. That's signifying to me bearish sentiment. We also price refused to trade back to this measuring gap. Didn't even reach it. Bearish sentiment. And then we slammed into the new week opening gap low. And my terminus, which were these relative equal lows that were formed between 434 and 435 right here. And that was, look at that, 299.66.25, and my exit 299.66.25 to the tick. Beautiful. Must be random, right? So yeah, that's my trade. Hopefully that made sense. It's a lot to take in. I kind of went over a lot here, but if you take your time and you start from the higher time frames, and you do this with every trade that you take, you will get better. And annotate your chart just like this and screenshot it and record yourself and save it. If you keep doing this, you will improve. I'm seeing improvement. This is beautiful. I feel like if I was to show this to someone like a more advanced ICT trader, they would be like, dude, good job. Like, this is, I can see your logic here. I can see how you're painting the story of this trade. So hopefully that helps, and I'll see you guys next time. Peace.